If you're trying to read the U.S. economy in real time, start with jobs. Because the official October report was delayed by the shutdown, markets leaned on the Chicago Fed's nowcast, which pegs October unemployment at about 4.4%, the highest in roughly 4 years and up a tick from September. That estimate also notes furloughed federal workers may have only partially affected the October read, given timing. Reuters through Q2, GDP growth rebounded to plus 3.8% annualized after a soft Q1, evidence the engine still had torque heading into fall, even as hiring cooled. Bureau of Economic Analysis. Inflation has downshifted versus 2022 peaks. The most recent CPI detail available shows thermometer 3% year-over-year in September, with core a bit higher, still sticky but far from crisis levels. Bureau of Labor Statistics. Private compilers put October inflation near 2.9% YoY, reinforcing the downtrend. In 2013, dollars price pressures are cooler, but not done. Real paychecks feel better than last year. Yet consumers remain sensitive to essentials and rate-driven costs. Mortgage rates finally broke lower. The average 30-year fixed slid to over 6.17% at the end of October, the lowest in about a year. Welcome news for buyers and refi-eligible owners, even if still high versus pre-2022. AP News. On prices, Case-Shiller shows national home values still up year-over-year through August, but appreciation is cooling. Latest national index print, 330, with another update due late November. Fred +1. What it means: lower rates could thaw demand, but affordability remains stretched where inventories are tight. Don't expect a uniform surge. Think gradual stabilization with regional splits. Manufacturing stayed in contraction in October. ISM manufacturing PMI 48.7, the 8th straight month below 50. New orders, production, and employment all soft. Tariff uncertainty and supply frictions remain a drag. Institute for Supply Management +1 services tell a different story. ISM services at POS 52.4, still expanding. So Main Street activities, health, hospitality, pro services, are offsetting factory softness. Seeking alpha. Here's the plot twist. Consumer sentiment plunged to near record lows in early November as the shutdown dragged on. Michigan's index DARC 50. Confidence fell across income groups, pointing to policy anxiety more than a sudden recession event. Small firms echo the caution. NFIB optimism dipped to 98.8 in September, the first decline in 3 months, with owners reporting more uncertainty and tougher expectations. Yet retail forecasters still expect a solid holiday. The National Retail Federation projects 3.7% to 4.2% growth, potentially topping 1 TRs in sales, consumer resilience, but with frayed nerves. Put it together. Labor market, slowing but not collapsing, jobless 4.4%. Reuters, inflation, lower than 2022 to 23, still above 2%. Bureau of Labor Statistics, housing, rates easing, prices up YoY but cooling. AP News, production versus services, factories weak, services expanding. Institute for Supply Management. Sentiment, confidence slumps on policy risk, shutdown. ISR Statistical Consulting Agency. This is a mixed, late-cycle look. Growth pockets remain, but confidence shock. Plus policy uncertainty are real headwinds. Voters just weighed in. In New York City, Democrat Zohran Mamdani won the mayor's race on a message heavily focused on cost of living, rent freezes, and wages, beating Andrew Cuomo, running as an independent, and Republican Curtis Sliwa. In Virginia, Democrat Abigail Spanberger flipped the governor's mansion, with exit polls showing the economy as top issue for about half of voters. And in New Jersey, Democrat Mickey Sherrill won the governorship, again after a race dominated by household economics and cost pressures. Across these contests, candidates who framed competence plus cost of living solutions generally outperformed. That aligns with the data. people feel price fatigue and policy stress even as inflation cools on paper. 3 things to watch from here. Jobs pipeline and revised data once shutdown disruptions end. Do unemployment and hiring stabilize? Reuters mortgage rates. If they sustainably hold near or below the 6%, housing activity could tick up into spring. AP News confidence versus cash flow. If sentiment rebounds with policy clarity, consumer spending can still carry growth into 2026. If confidence stays depressed, expect slower services and capex. ISR Statistical Consulting Agency. The U.S. economy isn't in free fall, but it is in a fragile balance. Slower hiring, cooler inflation, better rates, weak factories, wary consumers. November's elections reflected that mood. Voters rewarded messages aimed squarely at everyday costs and basic competence. Keep your eye on rates, sentiment, and the next clean read on jobs.